Hi, everyone. Welcome to State of the Market. I'm Mark Lichtenfeld, Chief Income Strategist with the Oxford Club. Before we get started, I want to remind you to subscribe to this channel. It's absolutely free, and that way you'll never miss one of our videos like last week's top stocks to buy for 2022, or the video from the week before, the top stocks to avoid for 2022. Just click on the subscribe button. Today, we're talking about a really unique way to read charts and how you can avoid a mistake that even some pros make. So, many years ago, and I do mean many, we're talking the 1990s.
Y'all ready for this?
I was just starting out learning about technical analysis, which is the study of stock charts. And I had the incredible fortune of meeting and talking with the biggest names in the industry. On a bus ride, I sat next to the legendary John Bollinger, who created Bollinger Bands. I regularly spoke with Ralph Acampora, known as the godfather of technical analysis.
I'm going to make him an offer he can't refuse.
And my friend Katie Stockton, now of Fairlead Securities, was just starting out as well, and today she is one of the most well-known technicians in the country. It was like being a baseball fan and each week getting to talk to Babe Ruth, Ted Williams, and Ken Griffey Jr. in their primes. Now, one day, I got to spend the afternoon with George Lane. George invented the stochastic oscillator, also known as stochastics, which measures momentum in a stock. Now, he told me stochastics are the only thing you need to trade stocks. Yeah, I wish it were that simple. As I always say, charts aren't a crystal ball, and it's a mistake to think they're a be-all, end-all resource, but they can help tremendously with identifying opportunities with large potential upside and, just as importantly, helping you minimize risk. I even use stochastics in my own trading as well as my trading services for the Oxford Club. The way I use them is to look for a change in momentum when the stocks are overbought or oversold. Now here's a chart of the Dow Jones Industrials as an example. When stochastics are over 80, the stock or index is considered overbought. When they're under 20, they're oversold. And when the black line crosses the red line to the upside, momentum is shifting higher. And when the black line falls below the red line, momentum is deteriorating. Now you can see on this chart of the Dow in late October, the stochastics flashed a warning. They were very overbought and turned lower. The index, however, kept rising until early November when stochastics again signaled the Dow Jones Industrials were overbought and momentum was declining. The index started to fall 2 days later. If we go back to September, we can see the same thing but in reverse. Stochastics were oversold and turned higher. Now stocks didn't immediately jump, but then it happened again a few days later, and the index climbed 200 points over the coming weeks. I usually combine stochastics with levels of support and resistance. That way, the odds are even more in my favor, as buying a stock that is overbought with improving momentum that is sitting on support increases my chances of a profitable trade. And if the trade goes against me, I'm out quickly because breaking support is an important signal that the trade isn't likely to work. Here's an example of a trade I recommended in my technical pattern profit service. In June, I noticed that Horizon Therapeutics was sitting on a trend line which acted as support. At the same time, the stochastics were oversold and turning higher. I recommended the stock at $90.25, and you can see what happened from there. The stock continued to move higher until early November, when incidentally, stochastics were overbought and turning lower. Now, I disagree with George Lane. I don't believe you can use stochastics as the only basis for determining whether to get in or out of a trade, but combined with other technical tools, it can be a great way for fine-tuning those entries and exits. So take a look at stochastics to help improve your trading results. Now, I hope you enjoyed this video, and if you want to learn 3 of the most powerful and successful chart patterns, check out my free training video, How to Trade Like a Champion. Just click on the link in the description to start watching. I'm Mark Lichtenfeld. I'll see you next time on State of the Market.